Hey, good morning. Let's go over today's trade plan. So far, the overnight session has been quite balanced, and the market has just been trading pretty much in a range. And heading into the open, we have key resistance at 94 to 96. Holding below that would leave the sell side in control. And if we get a breakout above 94 to 96, at that point, the momentum and the bias could shift back to the upside, and we could see a move back up towards 2000 quarter to 02 quarter quite easily, and 05 to 06, and even yesterday's high at 10 quarter to 12 quarter. But that's something that we will have to gauge in real time to see if there's enough momentum to really support that idea. But purely looking at price action, a breakout above 94 to 96 would indicate buyers regaining control. On the downside, we have support at 82 to 84.5, and a break below initial support would confirm sellers still in control and bring yesterday's low into play at 74 to 76. And that's still an area that can be defended by responsive buyers, and we could still get some activity down at 74 to 76. And if that area holds, then we could just balance in a range. So it's going to be important to watch the reaction at 74 to 76. Given that we're a bit light today on the econ calendar, and we have the FOMC announcement due on Wednesday, a two-sided session is still more likely rather than a all-out trend day or trend type session. And where ES is trading in relation to the 82 to 84 half initial support and 94 to 96 initial resistance zone is going to help us gauge which side is being more dominant. So a breakout above would tell us buy side's being dominant. A breakdown below 82 would tell us that the sell side is more dominant, and bring the 74 to 76 into play. It's an area where buyers can still be active, but of course, at that point, the momentum and the bias is going to be on the downside, so we will have to be careful at 74 to 76. And in the event of a breakdown and continuation, we can still get buyers active at the zones below, followed by a rotation back into yesterday's range. But if buyers are really going to hold this market together at this point, ideally they hold it above 82 to 84 half, and then just balance in this range, and then set up for a upside break. And even a breakdown below 82 would be a red flag, and it would just confirm that the short-term bias and the short-term control is still on the sell side. So those are really the main thoughts heading into the open. Let's see where ES opens in relation to initial support, initial resistance. It could quite well just continue bouncing in a range and open in the middle. If that's the case, then it's best to either wait for the market to hit an inflection point or only enter the market in direction of the immediate momentum. So that means that if you're seeing some heavy upside tick readings or heavy downside tick readings, then focus on that direction. And if the market's quite flat, then it's probably best to wait until it hits an inflection point, because trading the middle of the range could just quite easily result in a lot of chop and not really provide good reward to risk, and you don't really want to get caught up in that two-sided movement in a narrow range. So those are the main ideas. Let's see where ES opens up, and we'll take it from there.